Hello, this is Alex Kasmark for the FXEdge.com, and this is your free daily Forex video for Monday, January 4th, 2010. One quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Hello everyone and Happy New Year. First week of the new year will be kicked off with a bang. There are a lot of key economic news releases that may pave the way for further price volatility. We are focusing specifically on US data, as most recently good economic data has helped the dollar gain more strength as opposed to the last 6 months to the year where we've seen the opposite. Now, we must also look at the fact that this occurred during the last 2 weeks of the year when profit taking may have played a major role. We are very anxious to start trading, but we must first analyze price action as the market gets back into trading from vacation. We're going to be looking for several things, and now we're going to go ahead and cover the support and resistance levels for the euro dollar, pound dollar, dollar Swissy, and dollar yen. First up is the euro dollar, currently trading at 143.30. Our first level of support will be at 142. This was the low reached about a week and a half ago. A break below that will target 140.50, and following that is going to be 140. Now we don't expect the market to go much further than 140, perhaps a wick down to 139.80, but we do expect 140 to hold in the short term. Take that with a grain of salt because we will also be analyzing price action and economic data, and of course that changes on a daily basis. First level of resistance will be at last week's highs of 144.50. A break above that will target 145, then 145.80, followed by 147 and 148.50. Pound dollar currently trading at 161.33. First level of support will be at 160.50. A break below that will target 159.20, followed by 158 and 157. If the pound continues to gain ground, we're going to look to find resistance at 162, followed by 162.50. A break above 162.50 will target 164.20. Next up, we're going to take a look at the dollar Swissy, currently trading just under 103.50 at 103.49. Market has been relatively stable on the Swissy. Now we've seen wicks down as low as 102.80. That's just past the 38.2% retracement level from the previous move of the low of 1 parity, to the high of 105.08. If we take a look at the Fibonacci retracement, we can see that the 38.2% retracement level lies exactly at 103. We've seen wicks to 102.80, and now we may see further dollar gains, and we're going to be looking for a break of course, the 104 level. And let me zoom back in. We were talking about support levels. So 102.80 will be the first support level. A break below 102.80 will target 102. Followed by 101.30, 101, and parity. Now, a break above 104.20 will target 105, followed by 105.50, 106.50, and 107. At this point, 104.20 and 105 are the major levels of resistance. Of course, once those are broken, we'll have to see how the market reacts to 105.50. Before further gains. Finally, looking at the dollar yen, we've been following this trend line for quite some time, ever since we called the bottom of 85. Now, we were looking for the bottom at 85 ever since, I believe it was end of August, early September. Since then, we saw a market pop up to the 90.80 level, and if we take a look at the Fibonacci retracement, this is taking from the extreme low of 84.80 to the to the first initial recent high of 90.80. The market retraced a little bit more than 50%, but not closing below that level before continuing its trend up. Now, We weren't expecting an increase up to 93. However, we are pretty sure that the market isn't going above 95. That may be the high for the first 3 to 6 months of 2010, and we may be looking for a sell opportunity at 95. At this time, we're going to be looking for resistance at 93.20. This was Thursday's high. Above that, we're going to be looking for 95.20. Now, there may be a few areas of resistance between 93.20 and 95.20, and we're going to see how the market reacts this week and perhaps outline some of these resistance levels later on in the week. First level of support will be at 92.30, followed by 92. Below that, we're going to be looking for 90.80, 89.80, and 88.20. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for January 4th, 2010. Until tomorrow, good luck trading.